Hey, y'all, give me like 2 seconds. I'm just trying to go live on Instagram at the same time. All right, y'all. So we're going to be talking about new investor tips for you guys. I know it's the day before Thanksgiving. However, we can eat tomorrow. Today, we're going to talk about these markets, okay? We can be big backs tomorrow. Today, we're going to be big bucks. We're going to talk about this marketplace. So I know who's not cooking because you're watching this live. I know you're not up getting those sweet potato pies ready because you're watching this live. But that's okay. I'm not cooking either. I'm going tomorrow with an appetite. I took off this year. All right, you guys, let's talk about how you as a new investor can get in this marketplace. I have something very exciting for you. Of course, it's Black Friday is on the way. So, of course, I have something special for you guys as well. Now, listen, I've had people send me DMs asking me about various companies saying that they have a certain amount of money and they're ready to get into the marketplace, but are not sure what to do. So I decided that on this good Wednesday night, that this is what we're going to talk about. So if you are a new investor, can you please comment newbie in the chat so I know who I'm talking to? I know I have some of my seasoned investor friends hopping here on IG. Hey, Santina, Wise Money Academy does great with options trading. You guys be sure to check him out. I actually interviewed him on my podcast. So, all right, so we've got some newbies hopping on. Okay, listen, the very first thing you need to do, in my personal opinion, is don't just hop on whatever you hear on this here app. I don't care if it's from me. I don't care if it's from anybody. Don't do it. Don't just be like, oh, they said it on social media. Now I'm going to go run and I'm going to go put this investment on some app like Robinhood. We're not doing that. That's not where we start out. Okay. The very first thing you need to do is when you start seeing companies pop up on your social media, because I know it's exciting. I know people want to hop in the marketplace. I get it. I know that it looks enticing because we hear it and we trust the people that we see. And some of you may trust me. But before you go and purchase these shares of whatever company you hear us talking about, I want you to just write the company name down and I want you to go research the company. Okay. So first we're just going to write the company down. Then we're going to go research the company. That's what I'm going to talk to you about today as a new investor is you researching these companies. So I know, you guys know by now, if we're going to be investing, we obviously need to have a money management plan, okay? We obviously need to make sure that we have a set amount that we're putting aside and we've determined that it's not going to cause us any type of financial harm or detriment in the marketplace so that we don't put that money in there and then all of a sudden something happens and now we need to pull it out. That's what your emergency fund is for. We're aware of this. We're clear on that, right? So let's say that now you have dedicated a certain amount that you want to put into the marketplace and you're prepared to start investing. And you say, I have set aside, oh, thank you, Paj. You say, I have set aside a certain amount. This is locked in solely for investing. It's not going to cause me any financial harm. It's not affecting my savings. I've set this amount aside because I either want to purchase stocks or I want to purchase an ETF or I want to start getting into index funds. Okay. This is where our conversation begins. Because if y'all been following me by now, you know we don't play about money management. But for the new investors, when you decide that you want to invest into a company, I want you to start looking past the news. I want you to start looking past social media. And I want you to start pulling up the information that is surrounded around these companies, their quarterly earnings reports, which if they are a public company, they are required to report these numbers. Now, what's even better is if you get a company who has been audited by a third party, so you know that they're not inflating their numbers, okay? Number two, once you check these quarterly earning reports, what are you looking for? You want to check to see how the company has been performing quarter over quarter. So this will be helpful in determining if this company is healthy and they're moving forward, or if they have the potential to start wanting to make some shifts, like saying, okay, their cash flow is decreasing quarter over quarter. It looks like they could start doing some layoffs. It looks like they may start doing some hiring freezes. This isn't going to be a good place you want to put your money. You want to look at companies that are working towards expanding. Like, for example, during the pandemic, a lot of companies started to shut down, but you know who was expanding? You know who was expanding? Heineken. Heineken was expanding because everybody was drinking during the pandemic, because a lot of people got depressed and that's where they went to. They went to drinking. So a lot of alcohol companies did very well during the pandemic. Okay. Now that made it for a good investment for people. When you bought me I got a badge. You know how long it's been? I'm sorry, pause. You know how long it's been since I've gotten a badge on Instagram? That's so cool. Thank you. Thank you, Shanisha. Thank you. She has an upcoming conference. I can't be there because I'm going to be on a cruise, but it's amazing, her conference. All right, now, so we're checking these quarterly earning reports. Let me get back on track. We're making sure that they're going to be a good long-term investment if that is your goal. If you're a new investor, I don't think you should be trying to invest short-term anyway. I think you need to take your time and start to understand how these stocks move in the marketplace before you start trying to grab these shorthand bags. So for example, if you don't know what your shareholders' equity is, you shouldn't be trying to grab a short bag. If you don't know how to check the income statements and the balance sheets of these companies, then you shouldn't be trying to grab a short-term bag. Okay, that is for more seasoned investors who can say, I see where this company is currently performing in the marketplace. Based off of past indicators, I can determine that this is where it will be moving in the future. Those are the people who can get the short-term bags in the marketplace, unless you have some sort of, mentor or program or Discord you're a part of when they're telling you when to get in and out of those investments. If you're looking for short-term bags, my recommendation for anyone who is a new investor is to simply do what's easy. And the easiest thing is to start getting into things like the S&P 500, right? These index funds where it limits the amount of risk that you take on, but you still get to take advantage of the marketplace. I saw a statistic and it honestly broke my heart. So those of you who don't know, my focus is on, socioeconomic mobility and moving us forward and what that looks like financially. So there was some data that I read as of 2021, only 16.3% of African Americans trust and invest into the stock market, invest in bonds and ETFs. Now, there's a lot of people that talk about investing, and there's a lot of people that show up to investment webinars and seminars and all of those things. But the people who are actually putting their dollars into the marketplace, only 16% of us are doing that. So I understand that there's a lot of mistrust that comes with investing, and people are, just scared. You don't want to lose your money. It's hard earned. As a new investor, one of the best ways you can go about this is just by looking at index funds, mutual funds, where the amount of risk that you take on is very, very low. So if you don't know what index funds are, it's going to be where you take on a bunch of companies that are put together. And let's say that Apple's not doing well, but Meta is, right? Meta and give me another company. Meta and Google, those companies are doing well. Alphabet is doing well. So it's going to hold up the fact that Apple is not doing well. It's going to hold up that investment. Whereas if you were to individually invest into a stock, if that company is not performing well, then guess what's going to happen? You're going to see a significant decrease in your investment. And what new investors tend to do is when something isn't going well, they get so scared, you just want to pull your money out. Oh, I'm losing money today. Now I want to take my money out. When it could just be a natural fluctuation of the marketplace, because as volatility happens in the marketplace, it's going to move that way. It's not always going to be a significant increase. Sometimes it's going to fluctuate, and you have to be able to be comfortable enough in your investment to be okay with those fluctuations if you know what your goals are in the marketplace. Does that make sense? So I'll talk about this a little bit further. So Apple, for example, is a great seasonal and long-term investment. Every season, Apple has a new release. And during that time, they see a peak that happens in their investments. And so on holiday seasons, they see a spike that happens in their particular stock. And after that spike, it drops, has a correction in the marketplace, and then it goes up again. This has been year over year, I believe, for like the past 7 years, if I'm not mistaken, but it's been year over year over year for several years. However, it has continued in the same pattern year over year. So if you're someone who's like, oh, Apple's about to have a new release, I want to go hop into this investment because I feel like it's going to go up. And then you hop into it. And as soon as you hop into it, they do the release. And then now you see that the share price is falling off and you're getting stressed out because you're wondering what's happening. Is the do you remember when they had that thing that came, the article that came out, and they said that Apple was losing all this millions of dollars and people were selling their shares? And if you looked at the chart, you could see that Apple had been on a bullish market for like over a year. So it was time for it to have a correction. That's the kind of things we're talking about, because after it corrected, it balanced itself out. So that's an example of what can happen if you're a new investor and you don't understand the movements of the marketplace and you're just hopping in and buying something because you hear people are saying, or you're selling your shares too early because you hear the fear that's happening on social media. You don't want to do that, okay? Let me pop this in here real quick. It's, we have Black Friday coming up. So if you comment Black Friday, I have a special gift for you guys. Everybody who's been wanting to take that Stocks 101 class that I have, it is 75% off. Whoop, whoop, whoop. Let me comment this right here. It's 75% off. It's self-paced. You have access to the class forever, okay? Let me make sure I comment this real quick. Stocks 101. That's my Black Friday sale for you guys, okay? Stocks 101 class. Because I've been teaching my webinars, so I actually stopped teaching my Stocks 101 class. So I'm bringing it out of the vault for the purpose of Black Friday, and you guys get to have it for 75% off, okay? All right, cool. So yes, that is an issue that new investors have, is just not knowing when to get in the investment and not knowing when to pull out of the investment. And how you mitigate that is you can do one of two things. You can study the marketplace and understand fundamental analysis of the marketplace and understand technical analysis of the marketplace, or three things. Or you can just choose an investment vehicle that is low risk, such as index funds, mutual funds, exchange traded funds. Okay. Another thing is, stop waiting to start investing. Identify a vehicle that's going to work best for you and continue to invest into that vehicle month over month. Having a budget is key to being a good investor, because you need to know what you can afford to put in the marketplace that you're not going to have to borrow back. Because trust me, once you start seeing this money grow, taking that money out is going to feel a little bit painful, especially if you're investing into stocks that pay out dividends, which, if you don't know what that is, let's say you buy a share of a company, and then as that money grows, you're noticing that your stock had like a little money baby. And so now that money baby is going to work too. So you invest into the marketplace, and then that money that you put into the marketplace, outside of its normal growth, is also paying you back additional money on the back end. Now, what's cool is with these dividends, you can choose to either cash them out to your account or you can reinvest them into the marketplace. But most people like to invest into stocks that pay out dividends because your money's making money that's making money. And that is the kind of money that I like to make. Okay. So when in the Stocks 101 class, you guys get to see the companies that I've invested in that pay out dividends. You get to see some strategic decisions that I made around the marketplace, some not so wise decisions that I made around the marketplace. But I'm very, very transparent in there because you're looking at one of my brokerage accounts and you're getting to see the wise decisions that I've made, and so on and so forth. Now, diversification is going to be key for any investor, period. You don't want to solely invest into stocks. You don't want to solely invest into cryptocurrency. Okay. You want to make sure that you're having a blended portfolio. So if you're stock heavy, you might want to also consider bringing on some bonds into your portfolio. Bonds create a level of balance and security in your portfolio. So for example, I bonds were created to kind of pace with the rate of inflation. Now, inflation at one point in time was like around 10%, and the return on the I bond at that time was at 9.62 or 9.64%. Now, when you're talking about putting your money into a high yield savings account, it's not touching that, okay, at all. With a EE bond, you could simply say, you know what, I know someone just had a baby, or I just had a baby, and I want to put my money in a vehicle that will double over time. So if you buy an EE bond and in 20 years time, the value of that EE bond will automatically double. The only drawback that I would say to the EE bond is that its return or its yield on that EE bond is not as high as an I bond, but the I bond doesn't double over time. So it's really identifying what vehicle you want to use and what's the purpose of that vehicle. That's the same thing with investing in the marketplace when you're talking about investing into stocks, same thing with cryptocurrency, same thing with options trading. You have to identify what it is you want out of the marketplace. Okay. If your goal is to say, I want a short-term bag, I would be very weary of that because the amount of risk that you take on for a short-term bag is significantly higher than if you have patience in the marketplace. Having patience in the marketplace is what builds wealth. Most people do not want to have patience. And I think that that comes from the hype of social media, or maybe that's where I think it comes from. Maybe y'all can tell me something different. But the reality is that the people who become wealthy are the ones who take advantage of two things. They take advantage of compounding interest. They take advantage of dollar cost averaging. And then I can even add a third thing is they take advantage of time. So if you were to have your money and it was sitting in a standard savings account, and most standard savings accounts have a yield of about 0.1 to 0.3%. Okay. Now, those yields, 0.1 to 0.3%, if you were to keep that in your account, matter of fact, for those of y'all who are watching on this multi-stream, I'm going to show you something. But I'll be able to tell y'all on Instagram, okay? So let's do a savings calculator. I'm going to pull this up. If you're watching on the multi-stream, I want to show you this. It's pretty interesting. Pretty dang interesting. All right, I'm going to share my screen here. I'm going to show you something. Okay, so if you're watching from like YouTube and stuff, you guys can see the shared screen. Let's say that you wanted to start off and you want to put your money aside. And I'm going to show you this is the importance of getting into the marketplace as an investor versus just simply saving your money. Let's say you wanted to start out by saving your money and you just want to put your money up over time, and 20, 30 years time, you want to have that money to be able to live off of. All right, so let's say we put our starting balance at $1,000. And every month we're going to contribute, let's say $300 to the savings account. Okay. Now, the time that we're going to give this to grow is we're going to give it 20 years to grow. And the standard annual percentage yield on a savings account is 0.01 to 0.03%. We're going to do 0.1% because that's standard for most banks. If you go to Wells Fargo, Bank of America, any brick and mortar bank, this is what they're going to tell you. All right. So let's say we do that. Now, over the course of 20 years, the total balance that would be in your savings account would be $73,000. That would be the total balance. I want to see if it does the breakdown. Nah, dang, this was the wrong one. Okay, hold on. It's not, this one doesn't do the breakdown. I want y'all to see the breakdown of this for y'all who are watching. All right, so we did, what did we do? $1,000 monthly contribution of $300 over the course of 20 years with the standard 0.01% APY. Okay, there it is. I don't know if y'all can see this here. If you're watching the screen, you would have saved $73,000 in those 20 years. You contributed $72,000 by having the $1,000 initial deposit. If you're watching, hold on, let me turn my thing. Y'all can, you see my wig up there? Okay, look, right here. Can you see it now? All right, listen. So you contributed $72,000. Actually, let me go back to the beginning so you can see this. All right, here we go. Initial deposit, $1,000, right? Monthly contributions, $300 a month. You did it over 20 years with the standard annual percentage yield of 0.1%, right? Okay, so let's look at this. That equals $73,000 in 20 years, okay? However, You contributed 72,000 of that. So over the 20 years, you only earned $73.75 on that savings account. You see that? Over that course of time, you only earned 70 or in 20 years of putting $300 a month into your account. Let me wipe the screen off. That's what you earned. That's crazy. Now let's look at it if we did it into an index fund. Okay. Let's look at it if we invested into an index fund. Let me cancel this. How do I stop sharing? Okay. Let's look at an index fund calculator. And we're going to do the exact same numbers. The numbers are not going to change. I'm going to hold it like this for you guys. These is, y'all say hey to the Instagram people. All right. So let me share my screen again. And I want y'all to see this on YouTube. Okay. So let's say we started out with the same amount. That's the $1,000, right? This is index fund. Then we contributed, what was it, $300 a month to that index fund. Weekly, bi-weekly, monthly. Oop. Monthly. Okay. And with the index, let's go with the S&P 500. The standard, or I'm sorry, the average rate of return from the S&P 500 has been around 10%. Now, granted, last year went over 16%. Okay, so we're going to go with 10%, and we're going to grow that for 20 years. All of these numbers are the exact same. Let me show you the difference. Oops, dang it. Okay. Let me show you the difference. You contributed 72,000 like you did in your savings account, but instead of earning $3, you earned $162,000. That is the exact same thing that you did with your money, but you changed the vehicle that you put it in. Do you see that? You did nothing different but change the vehicle. But what most of us do is we just put it in savings. And we just save and save and save and save and save until something happens and we take the money out. But this is how you build wealth. Imagine if you had a newborn and you started investing into index funds when that child was born. And you did this over the course, and then they turned 18 and you taught them to continue to invest into this. This is how you can build wealth over time, y'all. It's so cool. It's so cool. Let me stop sharing it. Okay. So that's one example of low risk investing where you don't need to know much about the marketplace, but you can still take advantage of it because it's already put together for you. You just have to determine the amount that you can put into it month over month and just commit to that. It's perfect. Now, the stock market, which is what I love, that's my baby, but I also believe in diversifying your portfolio, right? And diversifying your investments. The stock market is where I was able to find significant growth in my finances and investing. And what I did, I'm going to show you guys a trick. That's index funds, Miss Diva. Okay. I'm going to show you a trick. Okay. I got to share my screen again. If you're watching on YouTube, you guys are getting some gems. Okay. So one of the things that I did was I said, okay, I know I want to invest into the marketplace. I don't have a bunch of money to do so. And this was, years ago. I was like, I don't have a bunch of money to do so, but I know that I want to start investing. So I looked up the NASDAQ 100 and I broke down the components of the NASDAQ 100. I looked at the share price for each company that was in it. And I said, well, shoot, these are the top 100 performing companies. So I bet I could put my dollar on them and it will go fairly well. So I knew that I had a set amount within my budget that I could invest into the marketplace with. I pulled up the NAS 100, pulled up the components, and I just simply went down the list and I took a highlighter and I highlighted the ones that fit within my budget. After that, I started to research these companies, and that's where the Fundamental analysis comes into play. This is you understanding the news around the marketplace. And it's not just what we see on Fox News or CNN or social media news in the shade room and stuff like this. It's not that. It's saying, how much is this company making? How much debt do they have? What have they looked like each quarter that has passed by? Have they been improving, or has their company been seeing some struggles? What is their long-term projections looking like? And is this something that I can see myself investing into long-term based off of what I am reading? The things that you look at within that, and we go deeper into this in the Stocks 101 class, I pull up the income statement and the balance sheet and the cash flow statement, and we use a particular company throughout the whole class as the example, and we talk about these things. So this is what you want to look at to determine if it's going to be a solid investment. If you are solely using the news as a method of saying that you want to buy into something, you are going about this 100% the wrong way. The news focuses on one major thing, and that is emotion. And if you are going to be a good investor, you cannot invest with your emotions. It doesn't work out that way. There's something in the marketplace that we call having a strong sense of emotional intelligence. And it's not to say that anybody is dumb, right? But it is to say that if you can feel your blood pressure rising and you can feel heart palpitations happening because of what's going on with a particular company, then your emotional intelligence needs work, because you should not be getting super excited because it's doing well. You should not feel, crazy because it's not doing well. You should be able to determine, based off of the knowledge that you have acquired, what that particular company is likely to do. And if it looks like it's not going to go well, guess what? You can simply say, hey, at this particular price point, I'm going to go ahead and exit the marketplace, and you're going to take, hopefully, your profit if you've done it correctly. Now, the stock market is where I find my joy. I saw someone in there ask me about the foreign exchange market. I started investing in the foreign exchange market in 2016, 2017. Now, originally, I did go through iMarkets Live Academy. Y'all probably see me if you knew me back then. But I kept learning, and I kept growing, and I kept developing, and I started to teach family members, and I was teaching friends. And there was a big negative connotation that got attached to the foreign exchange market because people associated it with network marketing. But I do want to let y'all know, okay, number one, I'm not with the company anymore. That was a long time ago. But I do want to let you know that the foreign exchange market is a real marketplace. It is a viable marketplace. It is the largest marketplace in the entire world. And everyday investors like you and I only shift or make up that marketplace by about like 2 to 3%. Okay. Companies invest in the marketplace. Your bank, where your money is sitting, your savings account, they take that money, because for you it's just a digital number. They take that money and they move it in the marketplace. The foreign exchange market, in my personal opinion, is a great way to make aggressive money, but you have to be prepared for that. You have to understand the risk that you're willing to take on. You have to have a super duper strong sense of emotional intelligence in the marketplace, which means that you're not trying to revenge trade. That could even happen in options trading, where you lose your money and you have to go get it back. You have to know when to cut your losses. You got to know when to hold them. You got to know when to fold them. Y'all know that song? You gotta know when. Okay. Anyways, you need to know when to do that. Okay. What else can I say about the foreign exchange market? Yeah, I mean, that's it really. And I like the fact that you can trade kind of when you want to trade, which was the big plus for me, because y'all know I have kids. So I would trade when I ate, and that was it. Okay. And their dad, he learned how to trade, and he went on to start a whole trading company and do his big one. So it was great. I also invest into cryptocurrency. If you're a new investor and you're wanting to invest into crypto, I do have a free, it's a Google document that I created with one of my other friends. We were on Clubhouse together many years ago, and we had a room of like 33,000 people in, was it? Yeah, it was like 33,000 people in our club. And we just talked about crypto every day. That was it. Crypto in the marketplace every single day. And so we created a document that will allow you as a new investor into the crypto space to get more familiar with it. If you don't want to go through all that and look at the document, you can simply go to coinbase.com. Okay, coinbase.com/learn. And they do have an earn as you learn program that is free, where you can start earning cryptocurrency as you learn about it. I would not suggest you stay on that platform. There's so many other better platforms to be on. Coinbase ran into a lot of issues within the past few years. A few years ago, they ran into a lot of issues. But if you're wanting to protect your assets and put them on a wallet, I would definitely not keep them on Coinbase. But if you're starting out, that is a good place to be. Yeah. So that's pretty. Let me see if there's anything I'm leaving out. I felt like I just gave y'all a bunch of information, and I really hope it was helpful. We talked about understanding your risk. Oh, okay. Portfolio percentages. The crypto marketplace is doing really well right now, and you hear people like, crypto, everybody's so excited, crypto. Everybody's so excited right now because it's doing well and everything is to the moon right now. But you can see that it's having like its fluctuations that's going on right now. That's normal. It just went up like crazy, right? So that is normal. But crypto is so volatile that you have to be careful in that space. So if you're going to invest into crypto, I would suggest you invest into the grandfather cryptocurrencies such as Bitcoin, Ethereum. Those are the two that I would definitely tell you to invest into. I have about 13 cryptos on my crypto portfolio, but just straight off the head, those two are definitely always going to do well. And don't look at how it's performing right now, because if you did that when it was $60,000 a coin, guess what? You say, I'm just going to wait for it to fluctuate, and you might miss out on the long-term benefit of investing into it. So if you have the money to invest and start investing into the marketplace, I would suggest, number one, you determine how much money you can afford to put aside on a monthly basis into the marketplace that is not going to cause you financial detriment. This is why it's important to have a budget. And I know y'all don't like me talking about money as far as money management is concerned. And I know y'all only want me talking to y'all about making the bag. But you can't make the bag if you don't have a bag. So you got to manage the bag to make the bag. Okay? Okay. So you have to have a budget. It's important. So in that budget, you're going to determine how much you're going to put aside. I don't care if it's $25 a month, but if the data suggests that only 16.1% of us are actually in the marketplace, then that means that how can we generate over $1 trillion a year? How can we generate over $1 trillion a year and put that in the marketplace, and only 16% of us are actually investing? That means that the majority of us are only continuing to make other people rich, and we just look good. And I don't know about y'all, but I'm really kind of tired of seeing people just look good on Instagram. And I really want us to actually start building wealth and taking those steps forward and stop talking about what wealth looks like to us and actually becoming wealthy. There was a documentary on the psychology of African Americans and what makes us feel like we have social status. And it is 100% tied into the clothes on our backs and the shoes on our feet and the car we drive and the home that we live in. And it said, if you want the African American to buy something, you have to make them feel like it is going to change their social status. But how can we change our actual social status if we are putting all of our money into somebody else's hands? So what I would suggest is you start learning the marketplaces. Put your money to work. Put power behind your dollar. And I'm going to tell y'all something, ladies, and I've said this several times. If you would not be with a man that does not work, then you need to put Benjamin Franklin that's sitting in that savings account to work. And don't just let him sit on that sofa in your bank account not doing anything, okay? Put Benjamin Franklin, put all them other dollar bills y'all have in that savings account and put them to work. They need to make some money, okay? They need to make you some money, okay? Okay. So if you're not investing in the marketplace, please do. This has been a public service announcement. Y'all gonna be tired of me. Well, listen here. It is going on 11 o'clock. I need to go and get ready for tomorrow. I appreciate you guys hanging out with me tonight. Listen, as you all know, I'm super passionate, okay, about getting us actively moving as it relates to our finances in money management, as it relates to smart investing into the marketplace, as it relates to paying off debt, and just socially, in the social economic standpoint, moving us forward. A big part of that is investing, but we can't invest if we're not managing our money right. And the thing that scares me the most is the data that surrounds us. That is the thing that scares me most. And I say this, and I wrote this in my book. We as Black women are the most educated. We start the most businesses, but we are drowning and drowning in debt. And a single Black female without a degree has a net worth that is less than $5. That means that most of us can't even go buy a cheeseburger without owing someone some money. There are a lot of socioeconomic and systemic things that have happened to us. We know that. But there are daily things that we do with our money that contribute to someone else or contribute to the forward momentum of us. So, what I would implore y'all to do is, if the value of the things that are in your closet is worth more than what you have in your account, then I would implore you to start thinking about money a bit differently. If the car note you have is more than the amount of money that you have sitting in your savings account, I would implore you to start thinking differently. I had an Audi, two-door Audi, that I was paying hundreds of dollars for. I think pushing upwards of like $600, $700, $800 a month for that Audi. I got rid of it and I bought a 2016 Nissan Rogue that I own. And a lot of the people that I go around, especially in Atlanta, everybody has luxury cars. But I don't feel bad because I know that the money that I was spending on that car note, I can put in the marketplace. So whereas I see other people who look wealthy, I know what the data suggests. And the data suggests that the average African American male makes around $50,000 a year. The average African American female makes less than that. The data suggests that only 16% of us are in the marketplace. And the data suggests that if we looked at social media, everybody's a six-figure earner. And that's not true. But there's a lot of people who fake like they're six-figure earners. And there's a lot of people who fake it by looking like it. And it's just not the case. And I'm really tired of us looking like wealth and being broke. So if you want to position yourself in the marketplace, I encourage you to please, if you're going to do cryptocurrency, Coinbase.com/learn is a free platform for you to do that. If you want to take the Stocks 101 class, it's 75% off. That's my Black Friday sale. I actually took this class down because I was only doing my webinars, but I've had some requests in my DMs. So I brought it back out. It's 75% off, which means you're going to get the class for like $49, I think. Yeah, like $49. I know people who have told me to charge upwards of $300 and $400 to teach this class. But if I say that I know that my focus is upward mobility for our people, then I know that my price needs to reflect what the average African American or average person makes, which is around $50,000 a year. So I'm comfortable with that because I know that my focus is on impact. And as long as my focus is on impact, the income will follow. So again, if you want that class, 75% off, things like $49. And then if options trading, I know options traders who are great in the marketplace. I'm not an options trader. I'm not going to pretend like I know what I'm doing in there because I don't. Foreign exchange market, I no longer teach it, but I used to. If you have some questions around it, I'm happy to answer what I can answer as it relates to the foreign exchange market. I just feel like there's such a negative connotation that's stuck to it that I'd rather teach on the stock market. And if anybody has questions, I'm happy to answer. And yeah, that's it. So get your budget, determine how much money you can put aside for it, to invest, get that money in the marketplace, and put some power behind your dollars. And I bet not have stayed on here for an hour talking to y'all and find out that you're up spending all this good money on Black Friday in the stores and that you haven't invested in yourself. So let's make sure we invest in ourselves, okay? All right, that's gonna wrap it up. Oh no, so sorry. I'm gonna answer a couple of questions, okay? So Lisk Foster asked, is there a code to get the discount? If you just comment Black Friday, it will send you the link. So just comment Black Friday and it will send you the link. The direct link to it. I realized that I didn't put comment on there, but yeah. If you comment Black Friday, it will send you the direct link to a discounted class. And this is saved on YouTube. So yeah, you guys can go subscribe to my YouTube channel and you can watch the playback on it. All right. Thanks for hanging out with me, y'all. I will talk to you later. Oop, I don't even know how to do. Okay, I have to end this. I don't know what I did. I'll leave the. How did I just do that? Is that what this is? Oh, okay. So I will leave the link up here. Just comment Black Friday. And let's see, YouTube. Are you guys hanging out with me? Now, Virginia, here's the link for you if you want to grab it at the discount. All right. And that's it. Bye, y'all. Oh, maybe should I hang out for some questions? Or should I go? I don't know. I think I might go.